How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Australian dollar versus the US dollar. And as of right now, we're still below the opening price of the month for Australian dollar versus US dollar. So we're in a discount. Now we're in a discount. High probability buy scenarios are most likely going to unfold. Here we have a classic break of the 20-day low right here and the 40-day low, going back into where the market structure shift has occurred back here in May. And ever since then, we've been getting bullish price action. So we got a bullish day here, a bullish day here, and bullish day here. However, these days have been small recently. So today, this is Monday, and this is Tuesday. But today is still Monday. You guys all know that the new daily candle starts around 5 p.m. Monday is a small range candle. How do we know that? We just look at Monday and look back the last 3 days. Or look at the last 3 to 5 days. Look back the last 3 to 5 days, you can see that it is one of the smallest candles compared to the previous days, especially this one and this one. So in a small range cycle, that would mean that either in the near future, may be tomorrow, Tuesday's candle, maybe Wednesday or Thursday, it's going to jump right back into a large range cycle. That's how you're able to catch these large days. Instead of catching wimpy days like this or this or this, you want to catch days like this, you need to have a small range day. That's what we're having here. Currently, I believe that the seasonal tendencies may not be unfolding here. Dollar may not be following a seasonal tendency this year for being bullish for August, and Australian dollar and any of the other foreign exchange currencies like GU, NU, and EU, and even AU may not be following a seasonal tendency of being bearish. I like to see price probably come back up and not respect any discount premium arrays. So all these are discount arrays because it's below the opening price. This order block is a discount array. Even though it, quote unquote, it's a premium one because you're waiting for price to go into it and sell from above it, it's still below in a discount range. Because if you take this equilibrium line here to here, price is currently what? Oversold. It's still cheap to buy AU down here. Then if you add in the confluence of the monthly opening price, it also is still cheap to buy down there. So that's something that we're also looking at as well. If we were to now compare this to GU, let's take a look because we know they're directly correlated. We see recently price comes down and takes back the last 20-day low. So we use IPTA, count back 20 bars. That 20-day low here was rated here on Thursday last week. And I'm saying, is this potentially the low of the month? Because it's creating a swing low formation below the monthly price. So if you ever look at any bullish month, you're most likely going to see a swing low form below the open. And ever since it makes that swing low, it starts to trade higher back into the premium range. Instead of being below here for the entire month, it drops below it to fake out retail traders to the wrong side, liquidate anybody that was long. So anybody that was long here, they come down, liquidate them, and now they turn price back around and try to target swing high formations. This is the look back 20-day high up here, and these are lower swing highs here and here that could be potential targets for the upside if you're looking to go long. Now, if GU is going to go long, that means any down day, you just buy after it and you seek for higher price action. Now let's look at EU. You can see the same thing has occurred. A break of some type of swing low here. It didn't take up the 20-day low, as you guys can see. So just like AU and GU, EU, however, does not come all the way down to the 20-day low. It fails to get down there. It actually breaks a more recent swing low going into August and then turning around. Today, you can see here, Monday, it printed a down close day. Now, if this market is going to be bullish, tomorrow may be a good idea to buy. Right? So tomorrow's candle that's already open here, even though it's Monday, could be a good idea to buy. Because it's one, a down close candle. Two, a small range candle. So you got two confluences stacked above it that may give you more favorable odds of looking to be a buyer. And you can see we also created a swing low formation after rating sell side below the swing low, running back into where the market shift has occurred. Look at that, busy, buy side imbalance, sell side inefficiency. So it still looks very similar, like AU ran into what, a fair value gap in the previous month, and now is running up. Now, if you take a look at NU, New Zealand dollar versus US dollar, the same thing can be said. You look back 20 days, you can see it takes out the last 20 bar low here. That swing low was liquidated, and now price is looking to trade higher. Today was Monday, small range candle, and we can see that maybe today might be a ideal day to catch the large range cycle to kick back in. It is well below the open of the month, so it's in a discount. It's below here. Now, if we take a look at dollar, the inverse can be said. So last month we were talking about this liquidity void. Many people weren't suspecting this to happen so fast, but it happens. It happens, and it sold really fast. Then towards the middle of July, it started to turn back around and trended back up, and we spoke about that in the daily updates. We finally got back up here. And now it created a swing high formation above the monthly opening price. Now, if you look at any bearish month, right? Exactly what I'm trying to tell you here. Go look at any bearish month and go in the daily time frame, and you're going to see, odds are, the commercials pulled price above the opening price, created some type of swing high formation, whether it's trading back into inefficiency or running out buy side liquidity, to then run back lower to take out sell side. So if the market now is going to continue to sell off, let's say this candle finishes up, it still has an hour and 11 minutes left to finish forming. If this candle finishes up for the day on Monday, and the next daily candle comes about, you got a counter trend candle that's up, also in a premium still, and it's a small range candle. So tomorrow, Tuesday or Wednesday or Thursday or Friday, near future, a large range candle is going to kick into play. And what would it target? Swing low. So like, let's say this swing low here, this swing low here, this swing low here. These are relatively equal swing lows. Price can now trade back down into those lows. We're back into an old area of inefficiency, and then continue to go lower. That could be something that's going to happen this month. Now, if I'm saying that, that means I'm going against the seasonal tendency. Like I said, the seasonal tendency is just a roadmap. You're just looking for hints and clues for it to be supportive. As of right now, it looks like the seasonal tendency may not be followed or respected this month. And we're going to play it by ear, day by day and by day, until we find ourselves in a good opportunity to find a setup. As of right now, I do think that dollar may not get back up here because we filled in this liquidity void. Price coming all the way down, coming back up. We may be getting that turning point. It happens. You got to switch sides sometimes. I went in first saying that, hey, I think I'm bullish for dollar. Right now, I might not be that sure, and it's okay. You got to wait till something makes sense to you. But right now, if I had to take an educational guess using all the tools that I know and the knowledge that I know, I believe that dollar is going to continue to go lower. Hopefully this is insightful. Peace.